Amid the multi-pronged banking collapse in the US and its impact on the stock markets over the week, Switzerland's Credit Suisse headed into a make-or-break weekend. Since Credit Suisse is a global systematically important bank, its collapse would have left financial markets on the whole in a deep crisis. The government rolled in again, but the free fall continued in the European markets today. Switzerland's second largest bank, Credit Suisse, has been sold now to UBS, and ironically, as Credit Suisse shares continued on a downward spiral today, the problems rubbed off on UBS. Credit Suisse crashed 63%, UBS was down by about 9%. To think the deal had been brokered to stop the contagion to other banks. In the meantime, a somewhat glaring contrast started staring us in the face. When banks and banking regulators in the West are deeply anxious, banks and their regulators in India, Japan and China seem calm and confident. But why so? For one, the answer lies in the state and its regulations. China, Japan and India have all strict regulations in place, and all financial institutions are well supervised. For another, we know that in recent years, Indian regulators have faced their own crises, learned from them and taken steps to improve regulation. In contrast, financial regulation in the US left space for considerable entrepreneurial initiative by players. On the other hand, the Indian regulator has been extremely conservative when it comes to letting in products and practices, although this has shortcomings of its own. The global economy cannot go forward unless there is space for allowing new ideas. This is particularly so in the age of the digital revolution, rising on the shoulders of tech entrepreneurs. But the enthusiasm for new must be balanced by regulations to ensure a healthy global economy.